This morning, we got a major warning sign about inflation. Producer prices climbing more than expected in January. We talked about this issue at the top of the show yesterday. Today, we get this data in the morning. Is this proof, Tim, of what we were talking about last night? The economy is heating up and potentially heating up faster than we all think.
Yeah, I think you have to be careful about PPI. It's a very volatile series, and I think there are factors here that a lot of people also believe are going to fall off on your yearly comps when we get out into April, May. Some of these are COVID related. I think if we were looking at emerging markets and we saw higher PPI in China, we'd be doing cartwheels and we'd be buying that market. So the inflation conversation that we weren't going to have earlier and now we're having, and we had yesterday, and we have inflation. We have different forms of inflation, and ultimately I'd rather see inflation than deflation. I think you've had a very interesting kind of burn through on extra slack in the economy, especially on the services side. I think that's really where we're going to run into it, and I think you're going to see a lot of businesses passing through those costs. I think in the short to medium term, again, what does this mean for the Federal Reserve? I don't think it means anything. I think they're going to continue to follow a path that they have their own measurement of inflation, and for better or worse, they're not going to change policy in the short to medium term. I do think inflation's an issue, but I'm excited about inflation right now as it plays off into resource trades and inflation and housing. And again, not home builders, but I think this is actually very good for Home Depot and Lowe's.
Yeah, in the Fed minutes today, and I know you guys comb through all of those minutes from the January 26th and 27th meeting, but they did note that it was important to take note of the temporary inflation factors, and they highlighted temporary because that's sort of the rub. It's only going to be a longer lasting inflation spike that gets the Fed to move away from what they are doing now. And that's a concern of the market, Stan. So unless you believe that what we're seeing is the start of something that is lasting, things don't change, do they?
Yeah. Listen, we saw a lot of people calling for inflation for 10 years after the global financial crisis, after ZIRP and QE and all that sort of stuff, and it never really came. Guy would tell you that it did come in a lot of other places, healthcare, education, and stuff like that, that maybe some of these gauges don't measure. I just say this. I look at what's on the tape here, okay? And last night I saw Kraft Heinz say because of commodity prices going up, input costs, they're going to pass them through or possibly pass through customers. I look at that chart. I pull up a 5-year. I hope our producers can do that. Oh my goodness, look at this thing. That is like the most epic head and shoulders bottom you will ever see. It looks like it's approaching that gap. And then I also look on the tape that Michael Burry, of Big Short fame, not our main man Danny Moses, was buying calls in this thing. That was the guy who was buying calls in the GameStop sort of situation. So a lot of really funky themes kind of merging here. But, that one looks kind of interesting to me. And to Tim's point, I think that that's inflation that a company like Kraft Heinz will like if they can push through the costs because we have all this stimulus coming too.
And I think that's the question. Can they push through the cost, Karen, or is it up to the retailer to absorb that cost and accept less margin? I mean, how do you start thinking about how this inflation impacts the consumer?
Well, I think some of it's very brand specific, right? So I think someone like a Lulu is going to have a lot more pricing power than maybe Athleta, just to give you an example. So the stronger your brand, the more room you have to push through that cost, even if you have them very contained. So that's where you have the potential for more profit. But to me, I'm a little skeptical, not 100%, but I'm a little skeptical of this notion of this rise in inflation being temporary only. It's possible that's the case. I think, we're going from an economy that was shut down to one that's really going to be jump-started. Those January numbers were enormous, and I don't think that's the end of the big numbers. I think we're going to continue to see them. So I guess the Fed could be right, but at the moment it seems to me that inflation is more present than just a transitory once we open, then it'll go back to the way it was. I'm not really sure if that's the case. So I think, positioned for inflation. If it skyrockets out of control, then I think the whole market goes down. We come back to that notion of what's the right risk premium. Mm-hmm. If interest rates go up a lot, then the risk premium gets higher, multiples come down. That will happen. Yeah. So a little inflation is good. I agree with Tim. A little inflation, that's where we are. good for now.
Yeah. It is interesting to think that the Fed, thinks that they could have it under control. I mean, we are coming to a point where things will only get better for the economy, and people have a lot of money. I mean, with the stimulus checks going out, households have a lot of money in their bank accounts. People are all, cooped up inside. They haven't spent on any vacations, Guy. I mean, I know that, you may have bought, Lululemon pants for $120. You won't mind if inflation takes that $120 pants to $125. For a lot of consumers out there, they want to spend that money. And as we go through the year, that is going to heat up more and more.
I believe that Lululemon aficionados call those joggers, and I haven't. I'm still a Levi's guy. I still have the same jeans that I had in high school, in case anybody cares. And yeah, you should. And Karen mentioned that the Fed might be right. I might play shortstop for the Yankees this year. Neither one is happening, and the Fed is not right, respectfully. And every time they open their collective mouths, the wealth gap in this country continues to widen, because guess what, in my opinion, inflation's great for the wealthy and those that have assets, and it's really miserable for people that are on the other end of the spectrum and don't. They're the biggest culprit in this wealth creation. We used to go to barbecues back in the day when they actually used charcoal, and I'll just give you this visual. And there was always that one dude standing above the charcoal with the gray charcoals, just sort of the smoke coming and always pouring the lighter fluid on it. And he always would throw the match, and you knew what was going to happen. You could see it. He was going to throw a match, was going to catch, and his eyebrows were going to be gone. Well, that's what's going to happen with the Fed. Jerome Powell better watch his eyebrows, because they're about to get singed off.
I don't know what kind of barbecues you go to.
Shepard Smith here. Thanks for watching CNBC on YouTube.